Okay, good afternoon, everybody, and welcome to this side event on the state of carbon payments and the voluntary carbon market in agriculture here at the Food and Agriculture Pavilion. We're delighted that you took the time to join us today. It's a topic that I'm really pleased that we have a chance to discuss together, the role of voluntary carbon markets in financing what is essentially is a critical transition, a critical transition in agriculture for climate action. Agriculture and food systems transformation can and of course must be a part of the solution to reach the Paris Agreement goals. And for that to happen, of course, it's about money. Finance is a critical lever to make the change necessary. But we all know that the current levels of climate finance, whether you look at the public or the private, are far too inadequate. The investments going into the agri-food system solutions are inadequate to make that change, to meet the growing demands of both mitigation and adaptation in the agriculture and agri-food sectors. Many of you would have seen, and I know that there are quite a few experts in the room, that the latest IPCC report informed us again that the financial flows are falling 3 to 6 times short of what is needed by 2030 to limit global warming to below 2 degrees. And the assessments by the Climate Policy Initiative, the CPI, and of course by ourselves at FAO, both reveal that agri-food systems are facing a particularly stark shortfall in climate finance. So on the one hand, we know that we have a lot of solutions to offer in agri-food system transformation, sustainable agriculture, sustainable forestry, agroforestry, soil restoration, you name it, a lot of solutions, but the investments going towards those solutions is actually on the decline. And of course, this is of great concern to us because we're looking to ensure that exactly the opposite happens, that we begin to understand the solutions offered and therefore be able to address the emissions from the agricultural sector, as well as the need for building the resilience and adaptation, and that requires investments. And that's one of the reasons that the COP27 presidency picked up this issue as a critical one and launched the FAST initiative at that stage, the Food and Agriculture for Sustainable Transformation initiative. Now, FAST has now evolved into a multi-stakeholder partnership that aims to actually catalyze, to accelerate the transformation of agriculture and food systems, especially by helping to identify, redirect the finance that is needed. The very goal of the FAST partnership is to support agri-food system transformation and implement the very concrete actions that countries want to improve both the quantity and quality of climate finance contributions, all going towards those same investments to build adaptation, resilience, mitigation within agriculture and food systems. Now, we all know that there's not enough money in the public sector to make all of the transformations, the transitions, what's called for in the global stocktake, right? We need systematic and systems change, and there's just isn't enough only in the public sector. And this is where you start looking at some of the other innovative finance and voluntary carbon markets have a critical role to play. They've long played a role in financing efforts on the deforestation front. Some of us have been working on that for a while, but the coverage of agriculture and food systems within these markets overall is still a bit limited. We're a little bit repeating the same patterns as we had under the CDM to some degree. But we don't know as much as we should know about these investments, and that's why tracking exactly what is and isn't going on is such an important starting point for us. And that's why we're so delighted as FAO to have embarked on a very nice partnership with CIAT to do a stock take of carbon finance for agriculture in the voluntary carbon markets. The study, which we're going to hear about in a moment, and it's going to be a preview today, begins to shed light, I guess, on the scope of carbon finance for agriculture, and it tries to draw the insights from all the data analysis and expert interviews that we've managed to pull in for this effort. What we hope is this collection of information begins to shine a light on what is a very important part of the investment picture and begins to inform future developments in the voluntary carbon markets and hopefully provide greater opportunities for agriculture that go run alongside and complement, of course, the implementation frameworks that will hopefully emerge from Article 6. I still hold out hope on that one. And that's why, of course, there's an urgency to conclude on Article 6. Uh, um, it's a vital discussion. It can establish that solid sort of international framework that we so badly need, that underpins everything: integrity, liquidity, you name it. But it's only going to reach its full potential in that sort of climate action through cooperation, lower costs, and if all the sectors are recognized. And of course, this sector, agri-food systems, for us is a vital one. We acknowledge that the sort of the nascent engagements in carbon markets, and we've seen a lot of action, a lot of activity around the red plus finance, and all of that. Not yet seen the evolution in other areas, but there's great interest from our perspective. A lot of countries are coming to us to seek support, including in the Green Climate Fund, to start to invest some of their readiness monies in developing readiness for carbon markets in each country. We have now more and more countries wanting to be ready. Just like we've had the red readiness in the past, we can see the voluntary and non-voluntary carbon market readiness is of increased interest to the countries that are approaching us. And that's why it's so important for us to shine a light on what is the starting point that we find. So a lot of opportunities ahead of us, and of course, it's essential to engage in these discussions about evolving the landscape of carbon markets, especially in agriculture and all the areas that need to evolve: standards, methodologies for credit generation, appropriate, innovative, and cost-effective monitoring. Of course, MRV. You're all very, very familiar. We know that agriculture is a difficult sector; it's a diverse sector, but we need to make progress quickly and show options to ensure integrity and provide opportunities. Also, going all the way down to the small producers that need to participate in the carbon markets. We're not just interested in a shiny big global market, voluntary or non-voluntary, but how to get that money flowing to where it matters at the smallholder level. And this is of interest not just to FAO, but to the countries, our members, who increasingly are asking us for this kind of support. So all of this is an incredibly long-winded way to say we really welcome this study. It is going to be the foundational piece that really sets up our future work on this area of the voluntary carbon markets and agriculture. And I really thank you for being here in our event today. And let me hand over immediately to you to sort of walk us through what are the findings and what is our starting point on this, I think, exciting journey. Lynette.
Yeah. Thank you, Kaveh. Hello, everybody. My name is Leni Wallenberg, and I'm from the Alliance of Biodiversity in CIAT, and it's my great pleasure to share with you the presentation on the preliminary results of our study. So may I have the presentation, please? Excellent. So I think most of the people in the room today are here because you've noticed that agriculture is gaining in prominence in the voluntary carbon market. What we know is that since 2021 in Glasgow and the surge of interest in net zero commitments, that corporates have been trying increasingly to meet those commitments in the voluntary carbon market in agriculture especially, and that carbon removals are now in higher demand than the supply. At the same time, agriculture offers an opportunity to tell a story. There are lots of SDG benefits associated with agriculture, in addition to providing carbon removal. So it's an attractive sector for people to invest in. Hence, it's not a surprise that in the last couple of years, last 2 or 3 years, we've seen that sustainable agriculture projects in the VCM absolutely skyrocketed. It's been the fastest growing sector. Mind you, it started from a small base, but it's been increasing dramatically. So the purpose of the study is really to capture this moment in time as the market starts to take off, to say what is the state of the voluntary carbon market, what is the state of agriculture in the voluntary carbon market, and what is the future? All right. So First of all, the study is based on a very broad definition of agriculture. We're looking at agriculture and food systems. So we're considering the conventional methane and nitrous oxide emissions, but we're also looking at carbon sequestration, not just from croplands, but also from grasslands and agroforestry. And then we're looking in the supply chain at energy, looking, for example, at fertilizer production energy as an input, looking at irrigation management. And then on the waste and energy side, everything from manure to compost and biochar. And then finally, really excitingly, we're looking at the food systems methodologies related to food loss and waste and dietary shifts. So believe it or not, there are methodologies available for each of these areas. This is how we compiled this list. So there are existing methodologies, not necessarily projects, but existing methodologies for all of these. So this is the scope. And the study, I should say, was also being conducted not only by CIAT and the Alliance of Biodiversity and CIAT, but also together with FAO very, very much, and the unique land use. And we've taken then the, oh, let me just move on. So what is the big picture here? What are the big facts that we found that gives you a sense of what's happening? First, agriculture is very solidly active in the VCM, without a doubt. We have 9 million in transactions in 2022. And in the last 10 years or so, about 20 million credits have been issued. Right? So very, very decent. But mind you, that's only about 1% of the VCM. This is being supported by 11, no less than 11 standards and at least 4 platforms. There are probably many more platforms out there, especially within company supply chains. 58 active methodologies across those different subsectors that I mentioned. And we have at least 800 agri-food projects. The number is very hard to find because some of the registries don't publicly publish their projects. And so part of this exercise has been digging out what information is available about projects where. Those 800 projects constitute about 11% of the voluntary carbon market, so pretty significant. And 2/3 of those projects are in the pipeline, which tells you something about the future of agriculture, that a lot of what's happening, we're going to see developing in the next, I would say, 5 to 10 years. Where is the VCM for agriculture? It's distributed across 41 different countries, with agroforestry being the most widely distributed and probably one of the more longer term types of projects. Grassland management being one of the newer types of projects and being in the fewest number of countries. And 3/4 of those projects, 3/4 of all of the projects that we looked at are in middle income countries. Only 5 projects are in low income countries. 5 registered projects, I should say. Okay, so those are big facts. That gives you the scope of what we're looking at. Now let's dive in a little bit deeper into some of these numbers. So as I said, digging out what projects exist is tough. And so we're relying on most of our data is from something called the Berkeley Voluntary Registry Offsets Database. And from this, we can derive about 751 projects across the subsectors that I described earlier. There are at least another 100 projects in some of these other registries. But you can see here that only 24% of those projects are actually ready to go to issue credits or have been completed. So we have a whopping 67% that are still have not been validated yet by the registry or the standard and not been able to produce credits yet. And interestingly, also about 10% that are either canceled, rejected, or on hold, sometimes for the methodology. And I'll mention an example of that in a moment. So what kinds of projects are we seeing? They fall presently into about 10 different categories. Many of the methodologies that exist in agriculture are not yet fulfilled with projects, and especially not fulfilled yet with credit issuing projects. And interestingly, about 90% of those projects are in only 4 sectors. So you can see the highest number of projects are in rice, with vastly most of them in the pipeline. The next highest category is in manure methane digesters. Sustainable agriculture, as I mentioned, has been growing very rapidly, and then agroforestry. And because I think of the CDM establishing a methodology for manure digesters, we see a very high prominence of existing credit issuing projects in manure digesters, and I should say mostly in China. So what kinds of credits are we seeing across these different project types? This figure shows you in orange, the orange dots, the credits, and in blue, it shows you the registered and completed projects from the previous graph. And you can see on the right, the axis mentioning the number of credits. And on the left, you can see the number of projects. And if you're interested in the actual numbers, the numbers appear at the bottom. And you can see that we have really just three categories of projects that are issuing most of the credits. So manure digesters, grassland management raced to the lead with very few projects, but very high credit numbers, and then agroforestry. Where are these projects happening? As I mentioned, they're in 41 different countries, and this figure shows you very clearly where the credits are occurring in each of those different countries. And really, China, again, is the number one player with 12.5 million. Total of 19.7 million credits distributed across these 41 countries. As I said, middle income countries are dominant. Interestingly, agroforestry is mostly in low middle income countries, and the other projects are mostly in upper middle income countries, which I think says something about readiness as well. So if we're interested in the question of how can the VCM serve to provide finance and an agricultural transition, especially to smallholder farmers, it's an entirely different question as to some of the, some of the statistics that I've been showing you here. While we see a predominance in the global south, and especially, as I said, in middle income countries, we're not seeing it in low income countries, but we do see specialized attention to smallholders in some instances. So we see first some specialized standards. Plan Vivo has been one of the oldest standards available, very small in terms of numbers of projects, but really important in terms of their community approach. More recently, in the last few years, Acorn developed as an initiative of the Rabobank. They're focused on agroforestry credits and issuing with certain targets, such as trying to provide 80% of the benefits to farmers, and they're focused explicitly on smallholders. And then most recently, we have a standard out of Brazil that is interested in social benefits generally, that includes a special attention to smallholders. And then aside from these standards, what are some of the features that have been supporting smallholders? I think really interestingly, this benefit target is important. So trying to, one of the criticisms has been project developers are taking most of the benefits. So how can we deliver more benefits to the farmers themselves? This is obviously having the most impact for smallholders. So we see more standards, more programs trying to target either 60 to 80, somewhere between 60 to 80% of the benefits from the VCM to the farmer from the sale of the credits. We also see in the case of Plan Vivo, which probably has the most comprehensive approach to smallholder development, a real community-led development process of the carbon project. So, for example, they don't presuppose what kinds of sustainable development goals should be addressed in the project, what kinds of co-benefits. They let the community decide whether it should be water, whether it should be biodiversity, whether it should be gender, and that will differ by each project. They also intentionally build, they're not scaling, I should say, they're not scaling by increasing their number of projects. They are building on existing projects and really trying to deepen and have long-term commitments to their projects. So a very unique approach. And then finally, we have interesting models where the benefits from credits are reinvested into agro advisories, where the farmers actually benefit more than just the sale of the credit because they're getting improved yields. So they can have actually quite significant improved yields and even income then from the agricultural products. The other aspect to mention, which I've alluded to before, is that the SDG benefits can provide a premium. Just heard from Bloomberg, from our colleague who's going to speak in a few minutes, that $5, they're modeling with an average of $5 premiums. We've heard about $2 from some of the projects. The question is, in the future, how will SDG benefits be measured? This is seen as a gap in the VCM. And can we improve the prices? In some projects, the quality of the project itself is leading to premiums as high as $75 or $60. But these are very small projects and very specific circumstances. And then finally, I think one of the critiques of the VCM all along has been that the incentives provided to farmers has been very low, that these projects generally, as in terms of selling carbon credits, are not motivating farmers due to the benefit from the carbon sale. But what we can see, and this is from Plan Vivo, is that cumulatively over time, these are significant benefits. They're not huge in terms of income, but they're providing streams of income that allow farmers to either invest in health and education, provide some kind of a resilience, an income for resilience in the times of shock. So there are components of the VCM that are very important for smallholders. So, just to conclude, very preliminarily, and this is really to kick off a discussion, because part of the reason for holding this session is to get your feedback. I know we have a lot of people who work deeply in this space, and so we want your feedback on what do you think the state of the VCM is. Our initial read is that it is small, but we shouldn't just because it's small, because it's growing. And it has a very significant role to play in terms of finance to smallholders. You know, it adds another income stream. Secondly, it does have what we would call early stage characteristics. This is a term that one of the commodity house traders mentioned to me compared to other commodities. So it has increasing viability in terms of especially demand and some of the methodologies that are being worked out. There's still a lot of uncertainty, especially related to soil carbon methodology and related to Article 6. And we also see complexity with this increased number of standards and also the methodologies themselves. And then finally, we have some trends to keep your eye on, you know, things that we think will be important to kind of make or break the sector in the future. We have these emerging large scale methodologies that are allowing gigaton scale projects, especially in, you know, grasslands and cropland soil carbon. And the question is whether this combination of artificial intelligence and remote sensing, and together with the near infrared spectroscopy, is going to allow really robust measurement of soil carbon, including soil carbon at depth. If it does, I think you're going to see the interest in soil carbon and grassland projects really boom, and that will become a major part of the VCM. The other question is, you know, to what extent can the premiums and the SDG benefits be better, more consistently quantified and valued, so that we really can recognize that these projects are about having impact, you know, for farmers and for an agricultural transition related to mitigation. And we can't lose sight of that. And until we really have some consistent way of dealing with the SDG benefits, I think that will be on the back burner instead of in at least the middle, if not the front burner. The other two things to really pay attention to are, I think all of the corporates are concerned about their scope 3 emissions, the emissions that are part of their food chain that they don't control. And they want to know, especially for those that have committed to net zero targets, how can they control those emissions? And as you'll hear from one of our speakers in a moment, the strategies are really diverse. The VCM is only one of those strategies, but how they meet them in the VCM is a huge concern, and whether they will use offsets. And so watching that corporate strategy is going to be important. And then finally, again, all of us here, I think, are keenly aware of the emerging Article 6 frameworks, and to what extent governments are developing carbon policies related to either their own domestic voluntary carbon market, to terms related to 6.4 especially, maybe limiting the export of credits, determining whether they're going to allow non-corresponding adjustment credits, and how benefit sharing, for example, might occur. And all of these things might affect the viability of the carbon credit, and developers are very nervous right now about the margins that they'll be able to earn on projects. So that's it from me. I'm going to put up another slide to kick off our discussion, our discussants and discussion. And I'd like to introduce Suniro Costa, my colleague, and also co-author on the study, also from the Alliance of Biodiversity NCR.
Thanks, Lini. Hi, everyone. So I'm Suniro Costa Jr., also from the Alliance and the one CGIAR Hub for Sustainable Finance. It's a pleasure to be here. It's also a pleasure to be part of this research, as Lini and myself have long been discussing about climate finance and how climate finance can support low emissions development in the agriculture sector. But now, as you see, we have a different context. We have the agriculture sector embracing the voluntary carbon market, the number of projects increasing quite a bit, and we have the Article 6 taking shape as we speak. And this can be a potential game-changing situation, considering that we can create, say, another generation of types of carbon projects led by the agriculture sector, considering that the agriculture sector, the mitigation potential is huge. We released an article last year showing a roadmap for net zero food systems, and the mitigation potential is massive. We are talking about um, billions of tons of CO2 equivalent every year. But we also know that there are many uncertainties related to that, perhaps blocking scaling VCM in the agriculture sector. And as you saw, related to prices, cost effectiveness and credibility of MRVs, benefits to farmers, especially smallholders. And then we are now here to discuss, and we brought here a knowledgeable set of panelists to give us a perspective in the future of voluntary carbon markets for the agriculture sector. So let me introduce you to them. So the first one is Kobad Vinagri. So Kobad is the global head of strategy for Bloomberg, an international research provider specializing in the transition to a net zero emissions economy. Kobad, please. Charlotte Streck, director of Climate Focus, a leading climate change consulting organization, bringing extensive experience in advising governments, NGOs, and private sector on climate change, forestry, agriculture, finance, and carbon trading. Charlotte, please. Daniel, director at the climate change unit of the Environmental Protection Agency of Ghana. Daniel is responsible for low emissions development, carbon markets, and transparency issues, serving at the UNFCCC focal point for Ghana. So currently, Daniel is quite a bit involved in mobilizing international finance for NDC implementation. And lastly, but not least, Dr. Shailendra Mishra, Global Head of Climate, Environmental, and Natural Capital at Olan. So let's get started as we are a bit behind in the schedule here. So let's start with Kobad, please. So you have a mic. Yeah. Is it working? Yes, good. So Kobad, you've been covering the VCM carbon markets for Bloomberg for a while. And could you please give us a bit on the forecast for agriculture in the VCM to 2030, and also to give a brief overview on factors affecting carbon prices, please.
Sure. So the way our analysts see it is, unsurprisingly, that the future of the voluntary carbon market is really in flux at the moment. There is really a moment of upheaval that the market has been going through in the last year, which centers around issues of integrity. Right? There's been a crisis in confidence on the integrity of many voluntary carbon market projects, and there are sort of numerous directions in which the market could go from here. And so we model a whole stack of scenarios to try and give some guidance about what that could look like. But essentially, it comes down to what is the eligibility on the supply side for a voluntary carbon unit, and how restrictive is that along the dimension of on concerns of integrity. And that has sort of boiled down simplistically to a debate about removals credits versus avoidance credits. And so, if you think about it, there are kind of two extremes of these scenarios. The first is that the voluntary carbon market continues in its current form, which is you have a fairly broad applicability, eligibility of projects on the supply side, both projects that avoid emissions and projects that remove emissions. And in that sort of scenario, we really see, that's a status quo. where prices continue to be low, the market continues to be oversupplied. Slowly, there is increasing demand for voluntary carbon units, but we're always sort of looking at prices being suppressed, to the range of about $10 per ton on average to the year 2030, maybe escalating to about $20 per ton out to 2050. So um, so that's kind of the bear case, if you like, for prices, a bull case for supply, and agriculture's role in that sort of market will continue to be small, but of some significance, as was pointed out. So a couple of percent of overall supply coming from a variety of different projects, but we know that those low price points will mean that we don't incentivize a lot of land sector participation above what we're currently getting. The other scenario, extremes of the scenarios that we forecast, are one where the supply side of the market, well, actually, it could be on the demand side, that buyers essentially say the only eligible form of a carbon unit is a removal, and that avoidance credits, either by regulation or by some voluntary codes of practice, or just by a direction of sort of consensus of major buyers of carbon units, says avoidance credits have too low a perception of integrity, so we're not going to buy them. And in that sort of removal only scenario, you would see supply really shrink, because the majority of supply comes from avoidance credits at the moment. And that supply would not catch up until we start to see technologies like direct air capture come down in price and scale. And of course, there are a couple of things you need to believe for that to be true, that direct air capture will scale and come down in cost. But we know that all the climate science says technologies like that will be necessary. But we see volumes pretty low until we kind of get a hockey stick towards 2050, when they really start to ramp up. And subsequently, the price of carbon units in that scenario would be very high. So we would see prices, in the order of $50 per ton by the year 2030, and anywhere from $100 to $150 per ton towards 2050, and they're probably higher actually in 2040. We think $200 to $300 a ton, as direct air capture is still coming down a cost curve at that time. Agriculture's participation in that sort of scenario would be higher, because the price is more, provides more incentive, and there's more reward for the sort of removal credits that agriculture represents. But again, it's not like it's unlocking gigatons and gigatons. We think in quantum terms, we're probably going to see maybe 500 to 800 million metric tons of supply, towards 2050 coming from the ag sector. There's still much more that could flow, but there are barriers to participation that will continue.
Right. Thank you so much, Kobad. So moving on to Charlotte, please. So after all these years looking into financials, especially in the land use sector, how can the VCM ensure finance flows to smallholders without compromising other mitigation impacts at scale?
Um, Thank you. I think carbon markets have a role to play, but when in the agricultural transition towards more sustainable practices. But I would think the first step that governments or others have to take is to decide of this, in theory, very high potential. It's three. If you look at the data, at 3.4 gigatons per year that the agricultural sector can reduce in or remove or sequester. But not all of the is, we just need to keep it also a bit realistic, the expectation. Not all of it is open and accessible to carbon markets. But percentage is, whether it's 500,000 or 500 million or 800 million or 1 billion, it is significant. And in a way, it depends on how effective different actors cooperate. Because other than in industry or energy, this is not about a single point investment. This is about changing landscapes. And changing landscape, that cannot happen by one investor, one project. It really depends on the cooperation between governments and private sector and local communities, or local communities, governments and private sector. Depends on all three are absolutely essential. Now, to ensure that smallholders benefit, rule makers can take a few steps to ensure that money flows into that direction, because money, generally the investors invest where there is opportunity, but this can be influenced. And I'm talking about rule makers because it could be governments, it could be standards, it could be integrity initiatives like the ICVCM or others. So we have different initiatives that influence the market and the investment decision. So three main things that come to mind. One is ensuring fair benefit sharing. This has become a salient topic, in particular in the forest world, because you can make, you can, in these, over not very, let's say, not very credible red projects, you had enormous amount of credits, enormous returns, but limited benefits for the local communities. I think benefit sharing is key, but I think it is less of a risk in the agricultural sector whether it will happen or not, because at the end, it's the farmers that need to take action. So they need to cooperate. So they need to get the fair deal for them, for their perspective. It's much harder for some investor coming in and, taking benefits that are not shared, because it is a cooperative approach. It has to be. So then another thing is we should empower. We can take the middle persons out all together if cooperatives and producer associations become project developers or program developers directly. So they can work with investors and develop programs where they, through their procedures, ensure, that the incentives are aligned, and you don't even have a middle person. So that's, I would think, even guarantees a fair benefit sharing even more than if you just rely on a project developer. Finally, there is and should always be a premium for community benefits projects with strong community benefits and other co-benefits. We see already now it continues to be an obscure market because we have this enormous price differential between, some credits that go for 50 cents and others go up to $80, and you are totally lost. If you are developing a project, where am I with my project? Will I be, at the 50-cent level or at the $80 level? But there it is, it is certainly, if you have more attributes that are being supported and can be also, valorized or, monetized, then you will get a higher price, and you also ensure, better community participation. And there are existing standards like SD Vista or the gold standards for global goals, but there may others be coming, in particular also with an increasing interest in these type of double benefit carbon investments.
Thank you so much, Charlotte, on your views on that. And moving on to Daniel, as a government representative and long been following these UNFCCC discussions on climate, what, in your view, would be the role of VCM in emerging national frameworks for Article 6.4 and the role on financing agriculture transitions, please?
Thank you. And thanks for having me here. A quick scan of most NDCs across the world, and in particular the NDCs from the global south. you realize that um, hardly would you find a lot of ARC areas in the NDC's mitigation areas, same as Ghana, right? So, and and that for me is a concern in the sense that whether it's Article 6 compliance markets, voluntary markets, the big animal in the room now is the NDCs. And if the NDCs do not adequately feature emissions from the ag sector, then that becomes, for me, a major issue. But there's a bigger context. The bigger context is that if you look at the Article 2 of the convention, it mentions full systems in the context of impact of climate change. And if we move down the line to Article 21C, 21B of the Paris Agreement, it mentions actions in the context of resilience and low carbon development, which therefore means that it provides the countries with the option of deciding how to capture agricultural emissions within the NDCs. For me, it's the first and the most important thing that we found. And in the case of Ghana, we in the current NDCs that we have, we did not feature mitigation interventions in the ag sector because of several reasons. And that in itself would then have a barrier of dealing with emissions in the ag sector in the NDC baselines. That's the first point. The second point is also about the linkage between the Article 6 and the VCM. And in our view, the current decisions of COP, and in particular decision 2CMA3, talks about authorizing for three things: for NDCs, for authorizing for ITMOs for mitigation purposes, and other mitigation purposes, including, in our view, voluntary offsets. That, in our view, is the hook between Article 6 and the voluntary market. So that, for me, is the linkage between Article 6 and authorizing HMOs, NDC baselines, and the NDC itself, and the role of government involving or putting ag emissions in the NDC baseline. But here comes the question: is to what extent are countries' inventories, national inventories, responsive to ag emissions? And that, for me, is the very foundational question. In the case of Ghana, we are able to account very effectively about 70% of our ag emissions on our current inventories. So when the ag emissions are not in the inventories and they don't find themselves in the NDC baseline, then that already becomes a barrier. So for me, the whole idea of the international and the national policy would affect the extent of supply of the compliance market asset as well as the voluntary market asset, because at the very center of it is the NDCs. Either you authorize or you endorse it against the NDCs. And that, for me, is very crucial for us.
Okay, Daniel, thank you so much for that. And moving on to Olan. Olan has a net zero target by 2050, and we know that it needs multiple interventions and actions. And in this context, what would be your view on the role of VCM in scaling regenerative agriculture for addressing Scope 3 emissions?
Great, thanks. Thanks a lot and thanks for inviting me for the panel. So, just a brief introduction at Ola Megri. As a global head of climate, environment, and natural capital, I really look into the environmental strategy as well as regenerative agriculture and high risk sourcing landscape for the company. Now, first of all, at Ola Megri, I would like to emphasize that we are really focused on three major goals: climate positive, nature positive, and livelihood positive. And I say this as livelihood positive as well because it's really about the farmers, it's really about the smallholders. We are supporting nearly 500,000 farmers globally for all different commodities in Ola Megri. Now, Voluntary carbon market. I mean, we all know whenever we want to talk about any transition, when we are talking about any extractive model to the regenerative agriculture model, we really need to look into account from a below ground soil health perspectives. Now, when I say soil health perspective, it not just include improved nutrient management, it includes improving the diversity of soil, biodiversity, I mean, and really through composting and green manuring, how can we enhance the more um, healthy soil perspective, because it not only sequesters more carbon but also improves the nutrient availability, that in turns improve the yield, which in turn improves the livelihood of the farmer because of ag inputs lower and the yield improvement. So this is what we all focus on in general from an Olam Agri perspective, and we are really moving towards scaling up those things. Now, in terms of voluntary carbon market, I mean, we all know from my agree point of view, I mean, these methodologies are like recently developed or still developing, like VM42 have just been launched this year. So there are multi-pronged approach that, and we are exploring multiple pronged approach to really meeting whether it is through voluntary carbon market for smallholder sectors. But as I would like to echo Charlotte, where she mentioned that it's not just all about the voluntary carbon market, because there are farmers who are already practicing certain things. Additionality play a big role there. So in those kind of terms, what is the value creation? So is it that the downstream people through the value creation of that low carbon products that we produce, is there a market for that? That is another angle that sustainable farming practices needs to be explored. One is from the voluntary carbon markets, one is from the low carbon products value creation. Now, coming to your exact question on the voluntary carbon market, we do have one example which we have explored in the RISE, which is called CORE, which is carbon offsetting on RISE emissions, which is we are piloting it in India, where we are collaborating with GIZ, ERI, academic institution, as well as UN Women, where we are working with 20,000 smallholder farmers, and the target is to reduce 90,000 tons of CO2 equivalent across different regions in India. And that's where alternating wetting drying, improved nutrient management, and these kind of practices where we are really reducing the greenhouse gas emissions there. So in a nutshell, I would say to make any success for these markets to is the collaboration, and of course policy does plays a role, but it's all about access to finance and collaboration among all different players in this
Perfect. Thank
sector.
you so
Thank
much,
you.
Leos. Thank you. Perhaps we have time for a quick question from the audience. Anybody, please? Yes. Sure. Let's see if we have some extra time. But thank you.
Hello, my name's Chiedza. I'm from Zimbabwe. I've got a company, Ubuntu Alliance, that's working at increasing access to information and data to farmers, but also collecting data from farmers and turning it into financial opportunities. I'm also with the Zimbabwe Carbon Association. And I think I would like to ask, in this room right now, how many farmers do we have in this room? By show of hands. Oh, got a few, yay! And so I was at Africa Climate Week, and I'm raising this because when we're looking at the voluntary carbon market, I don't think certain entities, especially your traditional financing institutions, realize that farmers, I don't know about every farmer in the room, we are at the forefront of the effects of climate change.
Yeah.
The voluntary carbon market has the potential to unlock medium to long term finance to help farmers invest in adaptation. And I love what Olam is doing. I've been sitting in number of workshops where your representatives have spoken.
Excuse me, can you move to the question, please? We don't have any more time.
Perfect.
Sorry.
Okay.
Yeah.
The question I want to ask you is, in 2014, the first soil generated carbon credits were generated by the Kenya Carbon Project. That was in 2014. Next year is 2024. What are you doing, respectively, in your organizations to scale up something that we know works?
Who would you like to take this one?
Be very brief. I mean, from the government side, from our side in Ghana, we have set up a national policy framework that provides 4 options for developers, and one of the options is to provide space for developers to engage in investing in projects that can be recognized by the government through the VCM. Already we have 2 projects that are working in Ghana on the back of that policy. So we have a clear policy on how to do so, and it's working right now. And in our view, it's the best way for engaging in the VCM with the government being involved in it. That is very simple. We don't authorize those units. Those units are supposed to be recognized by the government, and it's part of the national accounting system.
Thanks. Thank you so much. Then, unfortunately, we need to move on. So I would like to thank all the panelists. Thank you so much for coming, for your views on this topic. Really appreciate it. Thank you so much. And I would like to hand over to Marcel Bernoux, a senior natural resources officer from FAO, for the closing remarks. Thank you so much.
Thank you, Siniro. Thank you to the panelists. I will be brief also. Just really, I was taking note on the fly and also reading on what happened also yesterday, because yesterday was also a day on a finance trade. So there was also some discussion on that. I guess what we learn and we saw, so thanks, Lini, for setting the scene, because now we have, as you said, the big picture. We know where we are. We do not know yet which direction we are going, but we are going firmly, and we have a lot of options. What we know, at least from IPCC, is clear. We have no way but to use all the solutions available in front of us if we want to reach a 1.5 degree C. So this is clear. Basically, we have to invest in all possible solutions in all means. But having said that, on the potential for agriculture is there and is high. But having said that, we have to recognize several points that are very important that we need to address. And Daniel was mentioning NDCs. The Paris Agreement is really a game changer. Now all countries have commitment. What it means that basically, and we have private companies that have also their own commitment. We have international commitment, like international civil aviation, that have its own market. But what we need is to avoid its double counting. This is clear. So we need, and for that, we need to move towards some kind of harmonization between all the different opportunities we have. So Article 6.2, 6.4, 6.8 also, I can mention that, VCM, so all the compliant or voluntary carbon market have to align. International market like ICAO and the carbon offsetting scheme of ICAO has also to align. So double counting is not any longer possible. This means tracking, registry, that also communicate and also communicate internally within the country and externally. So there is a lot still to build, but you have no choice. We need really to move forward. On FAO, we are really committed to support the countries and all the players in the countries to have this agenda really high on address. So we are already investing some on our activities on the technical cooperation program and readiness, also reaching the GCF for Article 6 readiness, for other carbon market readiness. So we are already accompanying our member to help to them to really understand the complexity. Someone was mentioning, yeah, when I guess it's Charlotte, when I see the price from 0.5 to 80. So you imagine the range, and we see on the forecast also it's from 20 up to more than 100. So basically, we have to see so how to address that double counting harmonization. And the key point was perhaps the question we had is farmer in that equation. We have to be farmer centric, community centric, and this means quality of the carbon market, the quality, the equity, how we also embed all the other challenge, because farmers are facing multiple challenges, just not the climate change, but land degradation, biodiversity challenge, lose livelihood, economic. So we have plenty of challenges that we are asking for farmers to us to solve. They are ready to solve us, but to solve those challenges, but we need to help them. So basically, all this have to be connected. It's complex, but we have to address that. We have no choice. So basically, I want to thank all of you. I'm really to thank our partner, Biodiversity International, CIAT, CGIAR, unique on all of you that are also contributing to that, because we were having interviews with a lot of stakeholders to understand the complexity on the landscape. So really thanks to all of you that are in the room. And I would say just a start. We're engaging that conversation here, but it's really to follow, and we hope that we will be able to update regularly where we are and the progress we are doing in that road that we need all to take to support the farmers of the world. So thank you so much. The panelist on just a quick picture. If we can change the background, please. To a darker, I guess better if it's darker. The background. It's okay? Like, okay, so let's